Hey, what's good, everybody? Happy Friday. It is Friday. We officially made it. Hope everything's going well. Hope you're having a good day so far today. Let's dig into the markets. I apologize. We're working on the lights here, and I forgot to turn these off over here. I just got like a ton of those massive Canon lights for the warehouse to hang up on the walls and stuff, and they are super bright. I mean, I could feel my skin like baking as I have them on there. I should have turned them off. Sorry, quality is going to be bad today, but don't worry about that. You focus on the markets. We'll cover that stuff today. We did a class last night for our customers, the different tax forms you get for your accounts and what you need to do with them. So if you're one of our customers, go into the dojo. It's under the support section, the 4 different types of tax forms that you could get, when they'll be available and everything. Okay, let's get started. So the Dow finishing the week off positive here. We got about a 0.7% gain on the week. The Nasdaq giving you about 1%. The S&P higher by about 17 points on the week. Positive China news, right? We know that February is a boring it's a boring month, right? And so we did a class like this for our customers just to kind of show the data. I was going to see if I could pull it up real quick just to show you. I don't know if it'll look like much on the screen there, but the idea was that we kind of put together just a little the data behind this. So yeah, you can kind of see it. I'll show you the raw stuff. We know that in February the markets, as you can see highlighted there, they're really quiet, right? So very small gains, very small losses when there are losses. I won't go through everything at the moment, but we also broke down the data to show what happens when the markets are positive in January. How does February typically perform? And basically this is just showing you that if you go back to 1928, it's a positive gain when the markets are positive in January, meaning February is positive when January is positive. And over the last few years, it's been quite a positive month, although a very slow and boring performer there. So just something interesting. I thought, if you're one of our customers, you can go into the dojo and see the whole, it's like 5-8 minutes worth of data there, just to show you that February has really been sort of a snoozer overall, but positive, right? So everything as history plays out continues to play out. So if we take a look at the individual sectors today, I'll just kind of review how things went. There's some stock news we can go over, but I like to use Fridays to kind of review how things are going. You had the S&P 500 make another push back into the 2,800 number. Not quite there yet. This is the overhead resistance or the overhead ceiling that people are looking at between 2,800 and 28 and a quarter. I just drew a red box on there to remind me to keep bringing it up. I always like to look at what everyone else is looking at, right? So if you have a strategy in mind, it's great, but your strategy will definitely revolve around what other people do. So we've got the S&P 500. There you go, moving up to the resistance area there. Nasdaq having one of the better days, trying so hard to get over the 200-day moving average. It spent all week moving back and forth. If you know about candlesticks, you could see it there. You could just see that back and forth. Oh my God, this light is so strong. What have I gotten myself into? And honestly, it's probably 25 to 35 feet away. I mean, it could be further than that away on a ladder. Whew. Okay, so the Dow pushing higher here again, has a little less than 4% to go till we hit all-time highs. Looks like that's going to be, if we go there, looks like that's going to be the index to get you there first. And the Russell 2000 been playing catch-up. We've been mentioning that all week. It's finally trying to poke above the 200-day moving average. And as far as markets go, well, we'll get into it. We'll do that in a second. Okay, sector-wise, let's take a look here. We've got sector-wise on the day. You got semiconductors finishing at highs. Almost every sector is finishing at or near its highs, and not for the week, but highs for the year. So if we look at semiconductors, you got tech stocks making new highs there. Communication services kind of quiet. Healthcare almost near highs for the year. Home builders hitting highs for the year. REITs, wouldn't be right if REITs weren't hitting highs. It's just been nonstop there. Utilities hitting highs there. Consumer discretionary stocks hitting highs. Retail a little bit calm, right? Close to highs, but that one's pulling back at the moment. Regional banks hitting near highs. Not quite. Almost there. And then transports. Right? So transport's very close to highs as well. So sector-wise, you see this broad-based rally, slow and steady, not too much to get too concerned about. I do want to point out gold miners today. If you follow those, the GDX gave back most of its gains there by the end of the day, but still had a decent positive day there. I was interested, I found it kind of interesting that the bulls came back so quick in gold miners, junior gold miners, if you pay attention to that. And even the price of gold got a little bit of a recovery there. Let me just refresh my page here, and we'll take a look. Best performing sectors of the week. You got materials. XLB is a good symbol to use for that. Probably the most common one that everybody uses. XLB over the last 5 days, about 3% gain. Year to date, about 10% on the year. It's a little overbought, right? So when I say overbought, we just did a class on this. I sent it out for customers there, talking about what does overbought mean when we say that. It's not an opinion. It's a statistical sort of analogy that everybody uses, very common. But overbought means that all the symbols inside of that individual sector, or over 70% of them, are more than one standard deviation away from the 50-day moving average. Just a geeky way that the industry likes to measure overbought and oversold. Know that the materials sector pretty much overbought from a stock standpoint. Utility stocks, of course, about to hit new highs here, almost hit new highs today. That's one of your better performers. Got a couple percent on the week, 7% on the year. What's our best performer year to date? Industrials. So XLI is the symbol we'll use for that. The industrial sector, your best performing sector, pushing 20% gains on the year already. If you're not familiar, industrials, just think planes, trains, and automobiles, right? That's what the industrial sector is built out of, and some other stuff too, but makes it easy. Energy, about 15% on the year. Tech stocks, you got about 13% on the year so far. Sort of a quiet week, less than 1% gains there. Real estate, we know, has done well, also kind of quiet. Let me look at some of the different, let's break it down a little bit more and see, just since it's Friday. Solar, if you look in the solar, it's not a sector, we'll call it the group or the category, whatever you want to call it. The solar ETF, TAN, makes sense, right? Great week for that one, up about 7% on the week. Metals and mining, we already mentioned, a good week because of the price of gold and everything. Junior gold miners, I already mentioned that. That's near the top of the list. GDXJ, if you like to follow those junior gold miners, there you go. Steel, I don't know, just pointing out a couple things that had a good week here. You had steel, about 4.5%. What else? We talked about regional banking. That was a good one, about 4% this week. That's pretty much it. Just wanted to kind of review sort of the good, and let's cover the bad for the week. Not a lot. Your MLPs were at the bottom of the list. I don't really talk about those a lot. That's not that exciting. Communication services, that was your weakest performer. And I'm sorry I'm jumping around here, but mentioned that one a second ago. That's pretty much the only one that didn't finish very near or at new highs. So I won't dig into that anymore. We did a good job there, right? Okay, let's talk about some stocks this week. Kraft Heinz, holy cow, all over the news today. Kraft Heinz, not only is the stock selling off here, we'll cover that in a second, but Robert Kraft apparently has a warrant out for his arrest for solicitation of prostitution down here in Florida. I mean, the second part of that doesn't surprise me, but really, Robert Kraft, that kind of surprises me. Anyways, when the world crashes on him, the world crashes. So let's just talk about the stock today and leave out the speculation on what he may or may not have done while he was down here, and that they have on videotape, by the way. Let's just move on. Okay, sort of a triple whammy here for Kraft Heinz today. If you own the stock, Kraft Heinz, you know the brand, right? Kraft mac and cheese, Heinz ketchup and everything. First, the company reported earnings way less than expected, 10 cents off. Revenue was also below expectations. Then the company announced a subpoena from the SEC regarding how they go about their operations. The specific wording in the subpoena was the procurement of their operations. So we'll see what happens there. Finally, the company says, hey, we're going to write off $15.4 billion in the loss of value in some of our brands, Oscar Mayer and Heinz and everything like that. That led to the biggest one-day decline, I believe, in over a decade. At least when I looked at it, it was. That's 27.5% on the day. That stings. Wayfair did exactly the opposite of that, 27.5% gain on the day. The overpriced online sort of design company, they reported earnings that showed, can you see it, by the way? See at the bottom, it says minus $1.12. That means they lost $1.12 per share. We were expecting that they would lose more than that. I think it was $1.28. Oh, it probably tells me down here. So we were expecting they would lose $1.29. They only lost $1.12. Just shows that they're losing less money. Revenue's getting better and better, and that's helping overall. Shares are higher by about 70% on the year, so all good for them as far as they're sort of continuing to do well there. Let's go back to the negative now for a second. 57.7% decline on the day for stamps.com. These guys, so they announced that they had ended their exclusive deal with the U.S. Postal Service. You go on stamps.com, you get your postas, you can do the little machine, put your thing on there and stamp it right there. You don't have to go to the post office to get stamps. I'm not sure why they ended that, but because of that, they also said, hey, our forecast going forward is obviously going to be a lot weaker, so guys, just get ready for it. The stock sold off 57%. Okay, a couple other things and I'll get out of your way. I know it's Friday here. Newmont Mining up 3% on the day. Barrick Gold, which is the symbol GOLD if you're looking around, right? Did I get that right? Yeah. Barrick Gold, symbol GOLD, is looking into buying Newmont. So shares of Newmont were higher today. They're looking at doing this in what's called a hostile takeover. So we don't know the exact terms of anything yet. It's speculated that it was about $19 billion in stock, which puts you about 37 and change for the price of shares. They could go about this two ways. Number one, a hostile takeover, if you're not familiar with what it means, there's two different ways for a company to try to take over another company. The one is to make a tender offer, which is just above the price of shares. We just saw that for Navient, right? Mentioned that earlier last week. JAB did that earlier, or it might have been last week now. But basically you could say, hey, stock's trading at 35. We'd like to make an offer to your shareholders for 37 to just go ahead and buy everybody out. They can try to reject it. They could try to fight it, whatever. The other way about going about it is they just slowly start buying shares. Right? So the acquiring company, they just go start buying. Eventually they have some sort of control or majority control. They could put their own board members in there. When they put their own board members in there, those board members magically vote, hey, we'd like to sell the company to Barrick Gold. And then sort of that's how they take over. So it's considered a hostile takeover. It's considered good news for the company that's the target. So Newmont Gold higher today. And for that reason, you saw the gold miners a little bit higher on the day. They were a lot higher than that, actually, but closed still positive on the day. Intel, new highs here. You got earnings. Earnings, I don't think were that great, but revenue came in strong. These are the guys that make TurboTax, so they got about a 2% gain on the day. Baidu, back and forth. It ended up finishing lower on the day. Beat on earnings, beat on revenue, all strength in their online business and their streaming business. The problem was they spent a lot of money on iQIYI. I can't say it in Chinese. I know how you're supposed to say it, but I can't say it. iQIYI is one of their streaming platforms there. They've been spending a ton of money to promote that thing. And because of that, there you go. Stock was down about 2.5% on the day. What wasn't down, speaking of streaming, Roku, great day for that one, up 25%, and just continues to do well off the bottom. It's just a nice one there. So people playing along there look great. We covered this yesterday. Earnings better than expected, revenue better than expected. They said 1 in 4 TVs that was sold last year had Roku built into it. Their ability to monetize users or viewers has more than doubled, which people were expecting is going to mean a lot more cash. And so look pretty good there. I know I didn't put up the chart. I'm sorry about that. But you can take a look at that one when you have a moment. If you have any questions, I'm happy to answer you. Otherwise, we'll wrap it up, make it a short one today. No 5G for Apple just yet. You're right. Yep. That seems to be the talk lately, is about the folding phone. Everybody's like, it's the phone that folds. Are the apps going to work right? Is everything going to work right? Who cares about that? You see the price tag? See how much that thing costs? All right. Anyways, that's all I have for you. I really appreciate you watching. Have a great weekend. We'll be back Monday to do this all over again. You've got the ability to hit the subscribe button, really, if that helps you. You just press the button. That's all it is. All right. Thanks a lot. I appreciate it. We'll talk to you Monday.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.